Getting ready for the 4th of July. Well, today we're going to be breaking down Ethereum for you and its independence in crypto. We'll break it all out for you guys. You're going to love it. My name is Paul Barrow. Welcome back into Tech Path. Let's get into it today. I do want to thank our sponsor. If you're going into self-custody, one of the things you can start to venture into is self-custody wallets. And the wallet to go with is Tangem. All you have to do is visit Tangem's website, tangem.com. A couple of things there. This is like a little credit card. And you use it in conjunction with an app. If you're brand new to crypto, this is the place to check it out. It's fairly inexpensive to get one. Go get the 3-card set, super secure. The app is super slick. Use our link. It's going to get you a 10% off. So maybe just start your process down there. All right, let's get into a couple of news items here. This chart will blow your socks off, slap you in the face. The entire history of this chart has disappeared because an enormous sum of Bitcoin has moved on chain, 10x more than previous highs. I'll pop this up and kind of zoom back out on this one to give you an example. This is the inflow. Look at this, inflow. And of course, many people are saying, all right, well, that was the big push from almost 63 down to where we are right now, and under 60K, where Bitcoin has been holding. Bitcoin correlation to the S&P 500 goes negative, indicating there could be a potential bottom here. This is something that has happened before, and a couple of points within the article. Since 2019, Bitcoin and the SPX, the S&P 500, have experienced negative correlations 4 times. October, during a Bitcoin bear market. June 2021, you guys remember that. That was with the mining ban, which I think really cut short the last crypto bull market. And then December 22nd, when the FTX collapse happened. So October 2023, when Bitcoin was consolidating before any substantial rally, it was like from 25 to over 70K within 6 months. So that has been the comparison here, that if you look at the correlation of where the S&P 500 is in conjunction with Bitcoin. And of course, that's the thing that we talk about often is, where are the opportunities here? When liquidity comes into the market, what are they looking for? Typically, they're looking for some of the risk assets like Bitcoin, Ethereum. Other things that play into this is the political landscape. You guys know this. Right now, we're dealing not only with ETF potentials, but also who is going to be the president. Biden's post-debate crisis now evolving into a genuine threat to his re-election bid. There's a few key points here. Lloyd Doggett, who was a Texas Dem lawmaker, is now breaking ranks and has started to come out. Likely as this is going to be one of many that will come out in a position against President Biden. So every effort for the president and his White House and campaign to take and make a fix to the problem is kind of whether or not it's going to exacerbate it, or if he's going to, maybe he'll come in on this interview that's supposed to happen this week and turn it around. Maybe that will help, but I feel like the Dems have already kind of pulled rank and they're pretty much done with it. Listen to what he's had to say here in this clip. Take a look.
Yes, I have, and I understood it was a limb when I crawled out on it. I've been in Congress. You can tell I'm not the most youthful member there, and I'm not the most endangered member, and I thought it was time for me to speak up, not for any self-gain, but because I think the risk to our country is so great, and we need to have the strongest candidate possible in order to assure that the values that we hold for our democracy are not traded for an authoritarian strongman bent on revenge against his opponents.
Do you expect any of the other colleagues that you've heard from to follow your lead?
I'm hopeful that some of them will. Maybe more importantly is that they express their views privately to the White House. It's only natural, as you were describing, that the staff and the family gathers, though I would hope that he has more advice than from Hunter Biden, but that they gather in support of him. Stand by your man. But we need the reality of the discontent that's out there among those of us who fear a Republican House and Senate and who fear for the future of our country. And just to look at the cold, hard numbers from the polls, that they went down instead of going up.
When you see Democrats breaking rank like this, typically this is because it's going to affect down party lines, meaning the president and his poor performance is going to affect down party lines. What does that mean for crypto? Well, you're going to end up with a much more Republican forward House and Senate, what he mentioned there, and the opportunity there in terms of getting innovative regulation in place could be, especially if you have a Republican president, all plays out. So all of this could be positive, but it also could spin negative. We could see things change up in the Democratic Party as well. I want to go over to ETH right now. Rumors that the SEC might approve the ETH ETF tomorrow. This is coming in remember, a lot of these are still rumors. Be very careful on how you play the markets right now. No hype, no retail interest. This is a perfect setup for Ethereum to kind of melt faces. Very similar to what happened with Bitcoin. So kind of look back at the history. We've talked about this a couple of times here on the show. Is it does have the chance to get a real solid correction and could see an all-time high, and where we see Ethereum start to truly break out. I want to go to a clip real quick. This gets into whether or not we're going to get the ETF soon, and if not, when. Take a look.
What do you expect for a spot Ethereum ETF approval, and how will it compare to what you saw out of Bitcoin?
Yeah, so when do we think it's going to happen is a good question. Honestly, if you asked me 2 weeks ago, I would have said, I think the SEC is going to push it off their plate before the July 4th holiday. They obviously haven't done that. So it's not happening this week. I seriously doubt it. It might happen the following week, so July 8th, the week of July 8th. But it remains to be seen how many comments the SEC needs to give back to these issuers, how much conversation needs to happen between the SEC and these issuers. So it's possible that it might take into the week of July 15th.
That's where I feel it is going to happen, somewhere in mid-July, because of the back and forth that could happen on the S1s. The other thing that happened last week was that Solana got an ETF filed for it. This came in from VanEck. VanEck announced the only obstacle to Solana's ETFs are lined up here. This is Matt Sigel. He's going to be on our show next week. We're going to talk about this, but he stated that the SOL ETF approval depends on an appointment of a new SEC chair. Could happen right here, especially with elections coming up in November. Pointing at this point, there is an obstacle for SOL ETFs other than the SEC chairman. I do not believe the lack of regulation in the futures markets will be a disadvantage for Solana's ETF. That's the big question is, Solana doesn't have a futures market product, so that would be the question as to whether or not it could come out before then. A couple other clips I want to get to. This one is Matt Sigel talking about what I just said, which is the SEC chair and why it's so important. Take a look.
So, there's some focus that there's no regulated futures market for Solana, and that might be holding back the ETF. We think that is a Gensler psyop. He has created that condition since taking power. There are a number of ETFs that trade where the futures market is irrelevant to the price formation. I'm talking about shipping ETFs, uranium ETFs, power ETFs. So with the slight change in the regulatory environment in Washington, we think these will get approved.
But do you think if Biden wins in November, there's no way they get approved?
I wouldn't say no way. We could still have a new SEC chair even if Biden wins.
So it all depends on the SEC chair?
Yes.
All right, well, there you have it. I'm very surprised that Sigel said SEC PSYOP. I mean, that is something that is very intriguing that you hear a major asset manager talk about the SEC that way. So we'll find out next week. We're going to have Matt Sigel on talking about this. Here's a clip of him talking about why he's so bullish on SOL. My brethren, listen in.
And ETH is the gasoline that powers that open source app store, and it's the largest one. But when you look at the characteristics of the Solana blockchain, it shares a lot in common with Ethereum in terms of the decentralization, but it offers much faster transaction speeds and much lower fees. So over time, we look at this market as a winner-take-all or a winner-take-most environment. You may recall that Apple had 100% of smartphone profits even when they only had 40% of market share. It's possible that the crypto market develops like that, and with Solana about 20% of the size of ETH, the upside, if they can become that dominant open source app store, is much higher.
All right, so one thing he said there that is very key is the word if they can become. And that is, that's me saying, a very big Solana fan. I've studied this project, at length. We understand not only the partners, but we also look at, kind of the evolution of where Solana has come from. And I think they're still, meaning VanEck, I think they're still in the game that this has a really upside potential. And that's kind of the way I see it. If you're looking for gains, most likely Solana is going to give you a little bit more than Ethereum. But Ethereum is going to win. I don't know who wins it in terms of the next generation, and it's still very, very early in the markets right now. Steve Kurz, who's coming in from Galaxy Digital, talks about why all of this is happening, because there is a big shift happening right now, especially around the ETFs and the political landscape. Take a listen.
idea that if there wasn't a change in administration, that many of these future ETFs might not make it through the pipe. Do you agree with that?
Well, I do and I don't. I think the future ETFs beyond Ethereum really have to do with legislation being passed in the U.S. We've talked about this ad nauseum. I personally think whether it's the Dems or the Republicans, we're on the right track. Whether we get market structure legislation before the end of the year or whether we get it in a year, it's happening. The DC shift has happened. You can't unsee, tens of millions of voters, many of whom are single issue voters. And we're far enough from FTX, but close enough to an election for that shift to actually take hold. That will drive legislation, which will drive other ETFs beyond Bitcoin and Ethereum.
But does the DC shift still happen if President Biden is reelected?
I think so. Yeah, I think so. I don't think you can unsee. I mean, really, investors have spoken. The Bitcoin ETF moment, the 15 billion of net flows, the 60 billion of AUM. There's no putting the genie back in the bottle. People want this. Retail wants this. Investors want this.
Yeah, I think they're hitting on it right now on 2 points. There's been too many rulings, too many changes from the Supreme Court, all that indicate and point toward innovation. And I think that whether it's Biden in the House or Trump, it almost doesn't matter. Now, it would make it easier. Of course, Trump was there. Most likely he's going to really lean into what's happening in blockchain. But one of the biggest stories is this whole issue with Chevron deference. Now, many people overlook this because it has a very specific address to what's happening in crypto. Here's Justin Slaughter. He's coming in from Paradigm to talk about where this is going, but also how this has impacted crypto. Take a look.
Where the court says, Chevron has become a tool of administrative overreach. We think it is not based in the actual APA or the Constitution. The APA does not say that judges should defer to agencies. It just says courts should consider always whether or not an action is arbitrary or capricious. The power stays in the courts. I'll jump ahead to this, surprise. Crypto is part of this case. One of the arguments made by conservatives in particular is that Chevron is pernicious because it prevents legislation from passing, because agencies decide they don't need new legislation or anything. They can use existing powers. And this is what happens, right? Justice Sonia Sotomayor is talking with the plaintiff's lawyer, Paul Clement, great lawyer. I think he was former Solicitor General, which is like the top appellate lawyer in the government, and asking him, you're talking about gridlock from Chevron. What do you mean? And he said, no, what I'm saying, I'm quoting now, is Chevron is a big factor in contributing to gridlock. And let me give you a concrete example. I would think that the uniquely 21st century phenomenon of cryptocurrency would have been addressed by Congress. And I certainly would have thought that that would have been true in the wake of the FTX debacle. But it hasn't happened. Why hasn't it happened? Because there's an agency head out there that thinks that he already has the authority to address this uniquely 21st century problem with a couple of statutes passed in the 1930s. And he's going to wave his wand. He's going to say the words investment contract or ambiguous. And that's going to suck all of this into my regulatory ambit, even though the same person, when he was a professor, said this is probably a job for the CFTC.
Oh my God. So crypto was part of the argument here. So cryptocurrency was discussed in the Supreme Court, and the case of Chair Gensler being sort of arbitrary and capricious.
I mean, there's only one person who's previously been a chair of the CFTC in the Biden admin and also is a professor at MIT.
Wow.
Yeah. All right. So you can see here, guys, this is a big deal. It's one of the things that we talked about last week when Chevron deference was overturned. And it does have a major effect on the government overreach, which has been the arch enemy of crypto. And that is the SEC and the current chair. All of that is about to change, whether we get Biden in the House or we get Trump in the House or something weird happens. The point is that the government, the rest of the judicial branch, as well as what we're seeing from a regulatory standpoint, is starting to move in a good direction. Now, remember, MiCA is happening in the EU. We've got Hong Kong and Pacific Rim already making major moves. We're actually behind. So I think this is starting to catch up a little bit around what we'll see coming late 2024 and 2025. One last thing I want to get to, and that is this tweet right here coming in from Chainlink. We're excited to announce Fidelity International and Signum have partnered with Chainlink to provide their NAV data on chain for Fidelity International's $6.9 billion money market fund. That is significant, people, because what we're talking about is major finance, mainstream consumers who are exposed to those kind of funds, And this is a huge step. Now, imagine if that happened in the United States. That's the thing that I think we're going to start seeing most of Wall Street and a lot of these asset managers starting to pull into this. And what are they doing? They're using these international markets as test zones to try this stuff out. Once it works, then they're going to unleash this on the American public. And I think the American investment class is going to see a major shift moving forward. Chainlink, do not sleep on that one. This is one we're watching very closely. If you're not in the Diamond Circle, make sure and get in right now. It's a great place to get additional content. We've got a brand new group over there. We've got our closed forums in there that you guys can get access to. So that's getting ready to launch here pretty soon. So be on the lookout for that. If you're in the email list, you'll get notified. So make sure and just hit the link down below. If you're not following me out there on X, do that. It's @Paul Barron. I'll catch you next time right here on TechPath.